Alright, so this is part 2 of the video that we just released earlier last week. And the goal here is to cover the remaining 5 stocks from the top 10 stocks that are on sale in 2019. So if you haven't checked out part 1 already, make sure you check that out after this video. I'll leave a link in the description down below. But either way, this one's going to be a bit more interesting because we're going to look at some more international companies here as well. So let's get right into that. Oh, and of course, if you're brand new here, hit the subscribe button down below and drop a huge like on this video. I appreciate each and every one of those likes. Okay, so coming in at number 6, again, we're continuing from the first video, is a company called 3M. So 3M, if you're not familiar, is about a $100 billion company, and they have the title of being a dividend king. The stock is down nearly 30% so far in 2019, and most of it is really circled around the fact that investors are concerned about a slowdown in growth from this whole industry. In fact, many industrial stocks have taken a beating here in 2019, and I just happen to think 3M is a good recognized name that I feel comfortable putting my money personally into. 3M develops, markets, and manufactures various products worldwide in 4 different business segments: safety and industrial, transportation and electronics, healthcare, and consumer. I personally like that they're so well diversified and they provide everyday items and materials that all of us use without even realizing it. Analysts are still somewhat mixed on this stock, seeing only around a 6.5% upside from current prices. And like I mentioned, I believe a lot of it is due to the fear around a global slowdown in the economy as well as this industry. And when these fears kind of creep in, companies like 3M in the industrial space get hit hard with their profits and revenue. Now, from a technical perspective, 3M is looking pretty bearish here, and if I were to build a position in the stock, I would average in slowly. We broke the 200 moving average on the weekly with heavy volume a couple earnings reports ago, and since then we've come back up to test the level but got rejected since and sold off. I would personally not be surprised to see the stock come down to the 140s if things continue in this way, because sentiment in the space is extremely negative right now. And because of all this fear and negativity, stocks like 3M will continue feeling the pain until the numbers reported on a global scale start to improve and things start looking strong once again. However, despite all the short-term negativity that this stock is experiencing, I still believe strongly that over the long term, this is going to be a dominant company once again. Yes, revenue is slowing down. Yes, growth is slowing down, but that is expected, especially for industrial stocks. And personally, I don't really have too much exposure to industrial stocks in my portfolio, and 3M is looking like a company that I definitely want to have good exposure to. Remember, stocks kind of have their cycles. 3M is in a downward cycle right now, so this is a perfect opportunity to average into this stock, in my personal opinion. Alright, so moving on, coming at number 7 here on this list is one of the hottest stocks in the stock market today, and that is, of course, Tesla. It's really an understatement for me to say this is probably the most controversial stock, not only in the stock market, but on my channel as well. But anyways, Tesla so far in 2019 has taken a haircut here by a whopping 50%, and at times it seemed like this company was on its way to even lower prices. Things, however, have begun changing for the company, and investors that got in below the $200 per share range are already up pretty nicely on their positions. Tesla, of course, has gone through a lot this year on the business side, and the stock, of course, reflected that. And if you're not familiar, really, it pretty much went from fears of demand slowing down to fears of the company actually possibly going bankrupt. Now, I personally didn't believe that was ever going to happen, but a lot of the bears did, which is what pushed Tesla prices so low. Now that we're kind of halfway through 2019 here, these things have started to iron themselves out, and the fears of the company really going bankrupt is pretty much subsided at this point. And you can kind of see this with the stability that the stock kind of has right now. It's kind of hovering around the $220 to $230 range. Now, analysts are really mixed on Tesla's stock. There's a wide range of price targets here, but the consensus right now is about 10% higher from current prices. We have some analysts extremely bullish with $300 or more price targets, and some extremely bearish with under $150 price targets. But balancing these out, we come to a consensus here of around $250, which is acceptable for the stock and does provide some upside. Now, from the charts, you can see the 200 moving average on the weekly is a strong level for this stock, and recently we broke through that, and that really caused a lot of panic selling in the stock. In a matter of weeks, really, Tesla plunged from 280 to 180, and these were the darkest days for the company and stock that I've seen in recent times. Since then, we have recovered, and before earnings, we even got back up to $260 or so. But the earnings report just released sent the stock back down to the 230s on some disappointing earnings. The point here that I want to make, though, is that Tesla is a volatile stock, and this stock has swings that can really toy with newer investors, and because it's so heavily shorted, if the bears are in control in this stock, they can really pull this down to levels that a lot of us are not expecting. But on the flip side, as soon as the bulls are in control, the bears cover their shorts and we rip very high very fast in this stock. But either way, if you do plan to invest in Tesla, I personally believe it's an incredible company to bet on the future of the world, self-driving, AI, and all of that fun stuff. But at the same time, I do accept the fact that we may see prices of under $200 per share in the near future before we see prices above $300 per share again. Okay, moving on here. Coming in at number 8 is a smaller company that I don't think we've ever really talked about on this channel before. Maybe we have, but very briefly. That's a company called GTT Communications. And really what this company is in a nutshell is a telecommunications and internet service provider company. So this stock is actually down over 70% in just a couple of months, and a lot of it was driven because of their latest earnings report. Revenue from last quarter grew significantly, but was still down quarter over quarter, and their net loss was also $27 million for the quarter. Investors were not happy to see these losses continue, even with revenue growing year over year. Another point to make note of and to actually be aware of if you plan to invest in this stock is that it's a fairly small company here with around a $650 million market cap, so it is prone to some wild, volatile swings. That being said though, it wasn't always such a tiny company. Like we'll see in a second from their charts, it actually did drop quite significantly. Now analysts see some massive upside in the stock, around 224% upside from current prices, and this is again because of the amount the stock has sold off in recent months. Many analysts and investors do believe that at these prices, this stock is extremely oversold. And the charts here show just how drastic the sell-off has been in the stock, with volume really picking up in the last few weeks to bring the stock to prices that it hasn't seen since 2016. And as you can see from its all-time high in 2018, the stock is down over 80%. So the question you gotta ask yourself is this a dying company, or is this a massive buying opportunity? That is really the question, and that's for you to decide. For me personally, I will be waiting on the sidelines here and just watching this stock. I don't believe that this company really entices me enough to put my money into this. They aren't really in an industry that I think is going to be booming in the near future or even in the long term. And I'm not a huge fan that they're actually still operating at a loss here. So for me personally, not an investment right now. But that being said, with this kind of sell-off that we're seeing in the stock here, I would not be surprised if we create a bottom sometime soon and rebound pretty hard. Probably not back to all-time highs, but a significant rally, and there is potential to make some pretty good gains here in the short term, potentially for the stock. Again, I'm not a short-term investor, I won't be playing this, but that's just something that I observe here. Okay, now we're going to move on to our next pick, number 9 here, and this is kind of where I want to shift gears a little bit and look at some international companies. So of course, Chinese companies have taken a massive hit in the last year and a half or so. And one of the biggest ones that has been hit is Baidu. So Baidu, if you're not familiar, is kind of known as the Google of China, and they provide a whole bunch of services in China. The stock is down around 40% in the last few months, and this is a massive move for a company of this size. It currently sits at a $35 billion market cap, but it was much larger than this before we saw a huge sell-off in this stock, and pretty much the pressure that we've seen on Chinese stocks across the board since 2018. And really, Baidu, along with the next company that we're going to be covering, has been hit so hard by this US-China trade tension that it provides some incredible value here for the long term, if you believe what comes out of these Chinese companies with their reports and their earnings. Analysts believe that the stock is extremely oversold as well, considering their fundamentals, with a possible 66% upside from current prices. 66% upside for such a large company is a very rare thing to see, and it's clear that the Chinese stocks here are in full out free fall crash, and they're completely out of favor right now. This is also shown by the charts here, where Baidu is down over 65% from its all-time highs from about 1 year ago. So we have seen some drastic shift in sentiment here with investors. Really, in a nutshell, what I can see here is that investors have been fleeing Chinese stocks. They don't want anything to do with Chinese stocks, and this has actually led to a lot of them losing significant portions of their market caps in about a year and a half or so. But now that being said, this may be a golden opportunity to actually get into these companies before the next possible boom in the Chinese economy, whenever that comes. And if you are only kind of US exposure based, this may be an option to consider to get more international exposure. Okay, so now moving on, just before we finish our top 10 here, if you haven't seen part 1 again, make sure to check that out after the end of this video. Link is in the description down below. In part 1, I pretty much cover all American companies, so if you're only interested in that, that's definitely a video for you to watch. Okay, so coming in at number 10, our final stock in this kind of mini series here is actually 2 stocks, because one of them actually owns the other, but they're both traded on the public market, and that is Sina and Weibo. So Sina is actually the main company here. They're the ones who kind of owns a good stake in Weibo, but either way, they're both kind of internet-based companies. Sina stock is down around 45% this year alone, and Weibo stock is down around almost 50% this year alone. Both offer a significant discount from their valuations just a few months ago. Now, analysts see a huge upside in these companies, Sina with over 100% upside from current prices, and Weibo with almost 135% upside from current prices. Both seem to be presenting some massive opportunities here, at least according to analysts. And the charts here really show us just how bad things have been for Sina and Weibo. Sina is down over 75% from its highs, and once it broke that uptrend support that you see, it has taken pretty much a nosedive. And Weibo really tells us a very similar story here. It held the 200 moving average for quite a while, but since breaking that level, it has taken a nosedive as well. And currently this stock here, Weibo, sits at around 75% lower from its all-time highs. So both Sina and Weibo, like Baidu, is really presenting an opportunity here potentially, with a significant correction here from its all-time highs. Like I said, the main reason for this is, well, kind of twofold. One is the Chinese economy is slowing down, still growing around 6% year over year. But the bigger reason, really, the news headlines is around the trade tensions between US and China. And that's also caused a lot of negativity with these stocks. Now, I do believe if we do come to a trade deal, whenever that is, stocks like Baidu, Weibo, Sina, and other Chinese names will see a significant rally here. And we may not get back to all-time highs that quickly, but I do think that we'll see some significant upside in these stocks when a deal is finally made. I think that they're actually sitting at extremely suppressed levels here. But personally, I'm not a huge fan of some of these Chinese names. I don't really trust them, to be honest. But that being said, I do have some Chinese exposure in my portfolio, just so I can take advantage of that upside whenever that does happen. So now you know the top 10 stocks here. Which of these top 10 is your favorite? If I were to tell you pick one of these 10 to hold for the next, say, 5 years, which one would you pick? Let me know in the comment section down below. I'm really curious to find out what your reasoning behind this pick is. Personally, what I'm doing is kind of sifting through all of the stocks out there, looking for deals like this, but I'm only really putting my money into strong blue chip names like 3M, for example, because I believe that even if we do enter a recession in the next year or two, that these companies will come out stronger, and in the next 5, 10, 15 years or so, will be much larger, stronger companies. And of course, the dividends that a lot of these blue chips pay is a nice bonus to have as well. Either way, guys, hope you enjoyed this video. This was a fun one to make. If you want to see more videos like this more often, let me know in the comment section down below as well. But either way, I really appreciate you sticking around. Make sure to check out part 1 as well if you haven't done so already. And share this with a friend who may be getting into the stock market or is looking for deals to deploy their cash into the stock market. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.